Welcome to the Shepherd's Wallet podcast, financial guidance that speaks pastor. I'm Seth Scott, and I help ministry leaders navigate the unique financial complexities that come with answering God's call. Pastors face one of the most complex financial situations of any profession, yet there's a shocking lack of targeted, useful information available to help them. That's what we're here to change. If you've ever felt overwhelmed by housing allowances, confused by SECA taxes, or frustrated that generic financial advice doesn't address your unique ministry situation, you're in exactly the right place. Before today's episode, I have a quick question. Do you know if your church has a 401k or a 403b? Because if you said, I have no idea, you might be missing out on thousands in tax savings every year. Self-employment tax, or SECA tax, is most pastors' biggest tax liability. Today, we're diving into the 3 ways ministers can save serious money on their SECA taxes, and I'm starting with the one mistake that's costing 40% of pastors big time. Ready to stop overpaying taxes? Let's dive in. Hey, pastors! Quick question. Do you know what SECA stands for? If you said seriously expensive clergy affliction, you're not wrong. But it actually stands for the Self-Employment Contributions Act. And if you're a minister, it's probably costing you way more than it should. I'm talking thousands of dollars a year that could be going towards your family, your retirement, or hey, maybe even a vacation now and then. Pastors still go on those, right? I'm Seth from Shepherd's Wallet. And today I'm going to show you the 3 ways that you can legally and legitimately reduce your SECA taxes as a minister. These strategies have the potential to save you thousands every year in taxes. And no, none of them involve moving to a different state or hoping the IRS doesn't notice your tax preparer's creative deductions. First, a brief overview on what SECA taxes are. Here's the deal. While your neighbor who works at the bank pays 7.65% for Social Security and Medicare, and his employer matches another 7.65%, you, my pastor friend, get to pay the full 15.3% yourself. Lucky you. And here's the kicker. You pay this on everything you receive for your ministry work. Your salary, your housing allowance, even that $50 that sweet parishioner gave you for doing their grandson's wedding. Nearly $8 of that $50? Straight to the government, right off the top. So if you're making $60,000 a year total, you're looking at over $9,000 in SECA taxes alone. That's like buying a decent used car every single year and just giving it to the government. And that's on top of your normal income taxes. But here's what makes me want to pull my hair out, and trust me, I don't have that much to spare. Most pastors have no idea they have special tax strategies available that other people can't use. It's like having an arsenal of secret weapons but never using them. Sort of like that commentary on Leviticus that you bought but never read. Don't worry, your secret's safe with me. All right, strategy number 1 is so good, it's almost unfair. Well, it would be unfair if pastors actually knew about it. See, when a regular employee contributes to their 401k, they get an income tax deduction for doing so, just like you do. But they still pay Social Security and Medicare taxes on their full salary first, before the 401k money gets taken out of their paycheck. But pastors, oh no, you get special treatment. When you contribute to a 403b, and it has to be a 403b, not a 401k, more on this later, that money comes out before your SECA taxes are calculated. It's like getting a discount coupon that says 15.3% off all retirement savings. Actually, it's even better than that. It's more like an 18% coupon because if you consider your net pay as your baseline, you'd have to increase it by 18% to get back to your gross pay. That means for every $100 you earn in ministry, you'd only get to keep at most $84.70 after SECA taxes. But if you instead contribute that to your church's 403b retirement account, you can put the full $100 in, bypassing that 15.3% SECA tax entirely. Comparing that to the 84.7 that you normally would get to keep, that's an extra $15.30 that goes into your account instead of the government, representing an 18% increase, and that's not even including the deduction. Sorry, I got a little carried away. So let's say Pastor Robert earns $60,000 a year and puts $10,000 into his church's 403b. His SECA taxes drop from $9,180 to $7,650. That's a $1,530 savings. Plus he saves on income taxes too. Now, here's where I can get a little salty. Remember when I said that this benefit only applies to 403B plans? About 40% of churches in America have a 401k plan instead of a 403B plan. 40%. That means 40% of pastors are missing out on this benefit because well-meaning church treasurer Bob set up the wrong retirement account because that's the kind of retirement account you set up for employers. Bob, if you're watching this, we need to talk. This is why I'm so passionate about church board training. At Shepherd's Wallet, we offer both half-day and full-day training packages to help ensure your church is educated about your unique financial situation as a pastor and know how to make decisions that allow you to unlock your special benefits. Many church boards are flying blind when it comes to optimizing the special rules that apply only to pastors and churches. This isn't stuff they teach in seminary or business school. Go to shepherdswallet.com/speaking for more information on church board training packages. Now that we've discussed pastors' unique ability to deduct their 403B contributions from their SECA taxes, let's move on to strategy number 2. This is all about business expenses. And no, I don't mean writing off your coffee addiction as pastoral counseling supplies. Here's the thing. If you're only getting a W-2 from your church, you can't deduct unreimbursed business expenses anymore. Thanks, Tax Cuts and Jobs Act of 2018. But, and this is a big but, if you have any 1099 income, you can deduct expenses against that. So, weddings, funerals, speaking gigs, honorariums, all of that is 1099 income and is eligible for expense deduction. But here's the ninja move, and this is straight from my upcoming book, available for pre-sale now at shepherdingyourfinances.com. You may actually be able to structure some of your church income as 1099, unlocking your ability to deduct business expenses against it. Here's the basic idea. Almost every pastor I know wears multiple hats at their church. Sure, they preach on Sunday mornings, lead the volunteers throughout the week, and provide counseling to church members. But they also manage the website, clean and maintain the church building, handle social media. These aren't ministerial duties, so your church could pay you separately as an independent contractor for these services. Then you can deduct all your related expenses, reducing both your SECA and your income tax liabilities. It's like a 2-for-1 deal. Travel, office supplies, church management software subscriptions, mileage, it could all be deductible. And since you're already self-employed as a minister, there's no downside to carving off some of your regular salary as 1099 income. So, there are the first 2 ways to decrease your SECA taxes as a minister: 403B plan contributions and deductions against your 1099 income. Strategy 3 is the good news, bad news strategy. The good news is it happens automatically, provided you file your taxes correctly. The bad news is it's not nearly as exciting as the other 2. So while this technically isn't a way that you can actively reduce your self-employment taxes, it does represent how your SECA taxes can be partially offset by income taxes. The first way this happens is you get to deduct half of your SECA taxes as an adjustment to income. So if you pay $8,000 in SECA taxes, you can take $4,000 as an income tax deduction. Depending on your tax bracket, that could save you maybe $500 to $1,000. It's like the government saying, hey, we know this system is kind of unfair, so here's a consolation prize. It's not much, but hey, free money is free money. The second calculation that could be considered a SECA tax reduction is the built-in calculation factor that reduces your taxable base by the employer portion of 7.65%. That's why you only pay SECA taxes on 92.35% of your total ministerial income. So even though you're paying it all yourself, you get an employer portion discount. So that's it. There are the 3 ways that you can reduce your self-employment tax, which more than likely represents your largest tax liability as a minister. To recap, the 3 methods are: 1. Making pre-tax contributions to your church's 403B retirement account. 2. Deducting expenses against your 1099 ministerial income. And 3. Being sure to take the SECA tax deduction against your income tax liability. Now, technically, there's a 4th way to save on self-employment taxes as a minister. I call it the nuclear option. As a minister, you get an opportunity that almost no one else gets. You can opt out of Social Security and Medicare taxes entirely with Form 4361. Boom, no more 15.3% tax, and an instant 18% raise on all your ministerial earnings for your entire career. Sounds amazing, right? Well, here's the catch, and it's a big one. By doing this, you opt out of Social Security and Medicare benefits based on your earnings as a minister. Forever. Irreversibly. No takebacks. Now, here's the fine print. You have 2 years from when you start ministry to make this decision. And you have to have religious objections to receiving Social Security benefits. I don't want to pay taxes doesn't count as a religious objection, no matter how deeply you feel it in your soul. And trust me, I'm right there with you. While I understand the reasoning behind providing this opportunity to ministers, I find it thoroughly unfair to require young ministers in their 20s, fresh out of seminary, to make a decision that affects their family for the rest of their lives. Because as tempting as it is to take that 18% pay raise, you're foregoing an entire public safety net to do so. Replacing the benefits you've lost through Social Security and Medicare requires careful planning, decades of iron-willed discipline, and years of distribution planning that turns traditional retirement wisdom completely on its head. I personally know dozens of pastors who want to retire but simply cannot, because they've opted out, failed to plan properly, and have little to no savings. I bet you can think of a few pastors you know in this exact same situation. It breaks my heart, and I believe it breaks the Lord's heart as well. This is not what double honor is supposed to look like. I've got entire chapters in my book about this decision because it's so important and so complex. Most pastors shouldn't do it, but if you're thinking about it, please, and I cannot stress this enough, talk to a financial professional who specializes in clergy issues. All right, let's talk about the mistakes I see all the time, because apparently the tax code wasn't confusing enough, so ministers get their own special set of rules to mess up. Mistake number 1, using the wrong tax preparer. If your tax preparer says, you don't have to pay SECA, you're just an employee, run. Actually, don't run, that would be rude. Just politely gather your papers and find someone who actually knows what they're talking about. Mistake number 2, failing to utilize your church's 403b. Newsflash, but most pastors simply are not saving enough for retirement. And contributing to your church's 403b not only provides all the normal benefits of tax-preferred retirement savings, but as a pastor, you get special perks on top of that. Not only can you take a SECA tax exclusion for your 403b savings, as we already discussed, but using your church plan specifically allows you to extend your housing allowance benefit even into retirement. If that doesn't catch your interest as a pastor, then honestly, I don't know what will. If it does, though, make sure to subscribe to this channel so you don't miss valuable pastor-specific financial guidance like this. And mistake number 3, not keeping good records for business expenses. Look, I get it. You went to seminary to study theology, not accounting. But if you're going to claim deductions, and you should, you need receipts, mileage logs, and business purpose documentation. We discussed a set-it-and-forget-it record-keeping system in our previous episode about what I call the Sharpie strategy. We were talking specifically about tracking your housing allowance expenses, but you can easily apply this strategy to tracking business expenses as well. Speaking of which, what are some other ways that you can actually implement these strategies? First, check what kind of retirement plan your church has. If it's a 401k, start praying about how to approach your board about switching to a 403b. And by praying, I mean prayerfully prepare a solid business case showing how much money this will save you. Second, look at your income sources. Do you have any 1099 income? Could you restructure some of your church duties to create 1099 income? This requires some creativity and cooperation from your church board, as well as input from a tax professional. Third, if you're doing your own taxes, make sure you're using a platform that handles clergy taxes properly. TurboTax gets good reviews from ministry tax specialists. If you're using a professional, interview them first. I've developed a free interview guide that you can use to vet tax professionals before you hire them, to help ensure they're well-versed in clergy taxation. Finding the right tax professional who actually knows more than you do about minister taxes, and believe me, those are few and far between, can mean the difference between optimizing your tax situation and making costly mistakes. You can download this interview guide for free from my website. I'll drop a link in the description. Look, here's the bottom line. And yes, that pun was intended. Get it? Bottom line, it's a tax term. The tax code is already complicated enough, but on top of that, pastors largely don't know about their unique benefits, so they're often leaving thousands on the table every year. You spend your time taking care of everyone else's spiritual needs. It's time someone took care of your financial needs. You can plug into everything we're doing to help empower and educate pastors regarding their finances by joining the Sacred Capital community at shepherdswallet.com/join. For just $15 a month, you have access to a growing library of tools and resources, weekly live Q&A sessions with me, and discounted rates on financial coaching. I really hope you can join us. And hey, if this video helped you realize you might be overpaying your SECA taxes, smash that like button and subscribe for more pastor finance content, because someone needs to make sure you're not eating ramen in retirement. Thanks for joining me. I'm Seth from Shepherd's Wallet, reminding you that just like you shepherd your congregation's spiritual lives, you need to shepherd your financial life too. And trust me, your future self will thank you when you're not having to still preach in your 80s because you didn't optimize your taxes in your 40s. Next week, we'll be going over what I call the 5-10-15 rule, how pastors can build a solid financial foundation with only 3 numbers. We'll learn how to create margin, provide protection, and save efficiently, giving you peace of mind to dedicate your attention where it matters most, in your ministry. Thank you for joining me on the Shepherd's Wallet podcast. I hope these strategies help you steward your sacred capital with greater confidence and peace. If you found this helpful and would like to go deeper in your stewardship journey, join the Shepherd's Wallet community at shepherdswallet.com/join. You'll get weekly live Q&A sessions, pastor-specific financial tools, and a community of fellow ministry leaders committed to faithful stewardship together. Also, you can pre-order my upcoming book, Shepherding Your Finances. It's the comprehensive guide to everything we talk about on this show, plus implementation worksheets and strategies you won't find anywhere else. Pre-orders are 35% off for a limited time at shepherdingyourfinances.com. Thanks for listening, and remember, you are worthy of double honor, including the honor of proper financial guidance. See you next week.